Hello, everyone, and welcome to another episode of the Crypto Entrepreneurs Podcast with your host, Charles. Enjoy.
Hello, and welcome to episode 9 of the Crypto Entrepreneurs Podcast. I'm your host, the Crypto Guy, and today we're speaking with enrolled agent and founder of Archer Tax Group, Drew Kernosky. So, Drew, how you doing today?
Doing well, and you?
Doing super well, thank you for asking. Before we really jump into things, can you just tell us a little bit about your background and what you were doing before you got introduced to the whole cryptocurrency scene?
Yeah, absolutely. So I've been in taxes for, about 6 or 7 years now. Before that, I was in commercial real estate and just kind of got burnt out on being a property manager and being on call 24/7. And always really liked to we did a lot of property tax disputes for building valuations. And from there kind of jumped into a career in tax resolution, which, when you hear those commercials for if you owe $10,000 or more to the IRS, give us a call. So I got a really good background on dealing with the IRS from an administrative standpoint, understanding the process of how they go through the collections process before we even get to, a tax court, if you will. But from there, got into some consulting roles, started working with truck drivers, worked for a couple different companies on the back end on the accounting side, but then kind of fell into crypto. I had a client that was a truck driver. He's a silver trader, and his name's Kelly. And he pointed me to a Reddit thread in, it was early 2017. I just said, hey, there's a bunch of questions about taxes. Do you think you can, weigh in? And so I jumped on, saw the questions, they were talking about like-kind exchange for cryptocurrency. And I started doing a little bit of digging as to, what does the IRS actually say about, crypto specifically? And there's been one notice, and that's, was published in 2014. It's Revenue Notice 2014-21. And they just haven't really given much guidance from there. And so we've had to extrapolate. But, based on my knowledge of how they operate on the back end and being able to read and interpret the laws, we started kind of forming some strong opinions and some backed statements. There's a lot of misinformation around like-kind exchange, and just started giving out free information, trying to help people protect themselves from unnecessary penalties.
Correct me if I'm wrong here, but with real estate, that's also like-kind exchanges when you sell one property and roll it over into another. That's a like-kind exchange, correct?
So you're right. You're basically taking the capital gains on one property and rolling it into a similar property. It has to be like in nature, and there's a lot of really specific nuances within that law. There's some parts of it where you can't trade a car for a truck because they're not truly like, but you can trade a sedan for a sedan. A really great example of why it becomes such an issue is when we start looking at things like precious metals. There's been a lot of rulings out of the 80s that say that you can't trade gold for silver. The only time you can invoke like-kind exchange for that kind of commodity is if you're going from a gold bar to a gold coin of the same purity, provided it's a U.S. domestic gold. You can't trade Cougarans for U.S. gold or Eagles for Venezuelan gold at this point. So it's just one of those things that there was a lot of concern, because crypto is designated as property per the IRS. Can I defer my gains and my tokens by invoking like-kind exchange? And unfortunately, a lot of investors are using it kind of like the Michael Scott office. I declare bankruptcy, just running around screaming, I declare like-kind exchange. Didn't file any of the paperwork. And even if, they did file the paperwork, I have some significant doubts on whether or not it would pass muster in federal court.
I myself was, kind of running around like a chicken with his head cut off. I was trying to get all of my stuff together and figure it out, and I eventually found my way to a CPA, or I guess an expert in cryptocurrency taxation. And so, I know a lot of people are in the same boat. So you kind of, gave us your journey. Can you talk a little bit more about what you're doing now specifically with this cryptocurrency taxation? Can you give us just a brief overview?
Yeah, so we help a lot of individuals. If you've got a large portfolio and you're looking for an exit strategy, we help a lot of individuals plan for that exit so they're paying the least amount of tax. We work with businesses to integrate cryptocurrency, as a form of payment, or if they want to have their own token, we do some consulting with that. And then we do a lot of work with ICOs in the Denver, Colorado area, and actually a couple abroad as well. We kind of specialize in anything related to crypto taxes. We've been kind of through the ringer with a lot of the different trading and mining and loaning and looking at launching our own ICO at one point. So we've done a lot of the work there, but our bread and butter is working with taxpayers, especially small business owners, to figure out how to save some money on their taxes throughout the year, not just filing the returns.
There we go. And then again, you already talked about kind of how you made that transition. One of your clients was talking about Reddit posts that he had seen about, just asking questions, and you kind of started giving free advice, and then you kind of realized that, hey, there's a major need for this. Let's kind of turn this into our business. So can you really get into the nitty gritty of what you did to kind of rebrand yourself as a cryptocurrency, taxation specialist in a way?
Yeah, certainly. So I think anytime that you're in a service business, especially, we've kind of gotten into the era of information where everyone's got access to the internet, and that's both a wonderful and a terrible thing. It makes it very easy to spread, bad information. There were a number of articles that were written at the end of 2017 as the tax law updates were happening that were basically declaring that like-kind exchange was allowed for crypto. And these weren't, small little publications. This was, I think Bloomberg had one, Forbes had them. And they were basically quoting an attorney saying, these are the rules for like-kind exchange. And then they wouldn't have the attorney, directly say, and it applies to crypto. They would say, and the journalist would be the one that would make the connection to crypto because crypto is property. And that's just, a very journalistic sleight of hand, really kind of designed to push a narrative against the tax law updates. But the biggest thing, if you're going to establish yourself, you have to understand the laws behind, at least in the tax side, understand the tax laws behind the policies, and you have to stay on the bleeding edge. The tax law updates are the first major updates since, the mid 80s. And it's one of those things that I think a lot of tax professionals kind of get into a lull of this is the way that we've always done it. This is the way we're going to do it. They're very compliance minded. They're not necessarily looking out for their clients' best interests when it comes to their filing status or working with them throughout the year. They're used to just having someone show up in April and say, hey, I need my taxes done. Well, if you talk to me, December 20th, and we do a couple different things, whether it's expense readjustment or looking at depreciation or, additional contributions to a 401k, things like that. There's so much that we can do before the end of the year that, most CPAs and tax professionals really miss out on, providing that value for their clients. So I think, kind of in a nutshell, be an expert in your field, be involved, very, very directly, understand how the sausage is made, for lack of a better term, so that you can actually weigh in on the specifics, from a legal perspective and from a tax perspective.
100%. Every single day there's a new article and regulations changing on a weekly basis, it seems. So I really like that you touched on, kind of staying ahead of that and keeping informed on how this tax law is changing. Like you said, a lot of these, CPAs, guys who do taxes, they'll just kind of wait for their clients to roll in every year. They've kind of established themselves and they've got their clientele. They do minor things. They file, the tax return pretty much. And that's it. And so for anyone who's trying to make this move, you really do need to put a lot more time and effort and research into it. And then I also really like what you said about being proactive on the end of the year kind of stuff, where there's so many different things you can do before the year ends. And so if you really want to succeed in this industry, you're going to have to kind of take those initiatives. You can't just sit back like a lot of these guys do.
Well, and I really wish there was more information for taxpayers. It's really hard to kind of give general information, a lot. So one thing that, I'm amazed that more tax professionals don't catch. If you've got someone who's self-employed and they're filing it on their individual return on a Schedule C, maybe they just started a business and, they're a web developer and they're going to net $80,000. Having a conversation, near the beginning of the year and saying, okay, hey, you're going to have X number of dollars of income, maybe we should put you in an LLC and designate that as an S Corp. That advice alone can save up to, $5,000 to $6,000. I've had a couple clients that they were even W-2 employees, that their company, was willing to bring them on as independent contractors instead, pay them the same amount of money and give them more freedom to one, expand their business, and two, get paid as a contractor. And they're going to shave, I think, $6,000 off of their taxes this year, just by, not really changing how they're operating per se, but more so changing the way that those dollars come in. So if you've got that kind of flexibility, it can make a huge difference for your tax situation.
100%. I'm really shocked at how few people know that, just filing a different return such as a 1065 and 1120S can really save the individual thousands of dollars. But that is a very fine line because a lot of these crypto businesses are brand new, and so it can work against them with that LLC fee almost, in a sense, where you're paying up to $1,000 or so just to have it up and running. I could be wrong there. I'm not.
It just depends on the state that you file in. So California, it's an $800 fee just to set up an LLC. California is brutal on taxes. Same with New York and Pennsylvania even. So, for your listeners that have massive capital losses, those losses will carry forward on a federal level. Some states like Pennsylvania won't let you carry those losses forward. So in some cases, it doesn't even make sense to harvest a ton of loss with the downed markets because you're not going to reap the benefits of it.
That's another thing I see a lot. Sell, rebuy, and you can capitalize those losses. And I think it's like $3,000, up to $3,000 a year. I could be wrong there again.
Yeah, it's $3,000 in excess of your capital gains. So if you've got $10,000 of loss on Bitcoin and $3,000 worth of gain on Ethereum, you can basically wash the gains out. You'll have $7,000 worth of loss left over, and then you take $3,000 out of that $7,000 and apply that to your ordinary W-2 or self-employment income, and the remaining $4,000 will carry over to 2019's filings. So it's one of those things that, the other thing that we saw a lot too is, people that were thinking the market was going to bounce back up within a year, when you sell those tokens and claim, the losses, you're resetting your counter for long-term capital gains. So if you think the markets are going to come back up soon, you can actually be shooting yourself in the foot because long-term capital gains rates are way, way, way better than the short term. I mean, the highest long-term is 20% as opposed to 37% on the short term. So it's just one of those things that, that you have to really think about the long term, and look at the whole picture, not just kind of snapshots here and there. If you can't get the full value of your losses, why reset the counter?
Exactly. And so this really brings up a great point, is that there is so much, I kept trying to talk on little bits and pieces of information that I knew, but again, I was saying, I don't know, I'm not entirely sure. So there really is so much to it. And so this kind of segues into my next question. For individuals like myself or other listeners, small business owners who are looking for a tax consultant, any kind of tax expert, can you give us a couple tips and tricks to kind of find the best person to fit our situation? I know when I was looking around last year, I was kind of just asking a couple basic questions to try to get a feel for if the person I was talking to really knew what they were talking about, or if they were just kind of jumping on this crypto train and the bandwagon. So maybe you could give us a little bit of help and guidance with that.
Oh yeah. So and it's kind of funny that you kind of bring up the jumping on the bandwagon. I get an email probably every 2 or 3 days, and it's all over Facebook ads for a crypto tax academy that's put out by Happy Tax. And you can tell that, even someone that's been in the space is trying to capitalize on, well, we can sell this to other tax preparers and tell them that they can charge, $750 a return and be, have a steady stable of clients. Now, whether or not that's going to really make a difference, I haven't gone through their classes, so I can't speak to the quality of them. I've seen a couple of the free classes, and they seem adequate. But, if you're, a high volume trader or a business, or you're not just, buying and holding, you really want someone that's in the trenches with you. So I would definitely ask, what is your actual involvement in cryptocurrency personally? I mean, are you buying? Are you trading? Are you doing crypto-backed loans? What do you think about the ICOs in 2017? You're trying to get a feel for how well they actually know crypto, if they have a favorite coin, if they can articulate why that coin is their favorite instead of just saying, well, it's going to moon. That's another really good indicator. And then honestly asking them about their thoughts on Litecoin Exchange prior to 2017 and just saying, well, crypto is listed as property. Do you think Litecoin Exchange applies? And then I would really, check to see how well researched their answer is. If they just kind of go, oh, yeah, Litecoin Exchange is for property, this works, then I'd be a little bit, cautious, because it tells me that they haven't really looked at the rules for Litecoin Exchange in the actual section code of 1031. Because if you start to look at that, right even there, crypto starts to look a little bit different compared to, say a vehicle or a building. So it's just one of those situations, the more that you can ask them to kind of show their work and you can at least see how they came to their conclusion, the better off you'll be.
There we go, guys. Yeah, definitely you want to start with what their involvement is with crypto. If they haven't touched it at all, they don't really know that they won't really know the nuances of it. So it's great that you have someone who is involved in the scene, who's bought and sold crypto, who has, done some sort of business with it. And then again, ask what their thoughts are on like-kind exchange. Like you were saying at the beginning, you can't trade a truck for a sedan. You can't trade gold for silver. So with crypto, it's this very weird gray area at the moment where we don't really know how exactly the like-kind exchange works and what can be considered a like-kind exchange. So if you're talking with somebody and they just say, oh, yeah, it's like property and like-kind exchange applies, they might not know exactly what they're talking about. And it might be time to dig a little deeper.
Certainly. Well, and it's one of those things, like, I think there's a lot of, tax professionals that are still like learning the 2017 tax law updates, and the filing time is now. There are some things that they're still getting some regulatory clarification on, but if they don't have at least an idea of how it's going to apply to you as an individual, then that's not a good sign. That's a tax professional that is just kind of sitting around and waiting for the answers to come to them instead of seeking them out.
Exactly. Someone who's not being proactive, as you said.
Right.
Right. Perfect. So I guess I have just one last question for you. And, we talked about what a lot of the listeners who want to file their taxes can do. And I know you've touched on things that you've done, but can you give any of our listeners who kind of want to make this move to crypto taxation and, specializing in cryptocurrencies with regards to tax, can you give them one overarching tip on how to get started? I know you had already mentioned kind of being on that bleeding edge of regulation and laws and stuff like that, but something they can start today to kind of make that move.
I think the biggest thing is just being involved in the space. You don't necessarily have to be preparing tax returns to necessarily learn about crypto. Start trading coins. Start understanding what your clients are seeing when they go to GDAX, or understanding their frustrations when they transfer coins from one exchange to another, or looking at Maker and CDPs and just trying to get a better idea of what is actually going on in crypto. Set up a virtual miner, or talk to someone who has been mining. Just jump in with both hands and just get in as crazy involved as you can. I feel like every day that I do research on crypto, I find like 4 more things that I didn't know were going on, or that are being developed, and it's just a really exciting space to be in. But you have to know how it operates.
Yes, 100%. From the consumer side, I would be so much more comfortable with my tax guy really understanding the space. And if I could have a conversation with him, I was sending coins from Coinbase, or Coinbase fees are way too high, it takes too long to send it to Binance, yada, yada, yada. I just feel like it would make me as a consumer much more comfortable and, relaxed, knowing that you know what you're talking about.
For sure. Well, and it's great for me and for my clients, because, we trade tips, we trade, things that we're looking at for investments, things like that. Obviously I don't do that in an official capacity because I'm not a financial planner. But just, having all these different people out and about, with being able to kind of spread out the research and development side of things, it's amazing how much we can band together and benefit from that. There's so many different groups out there that claim to be working towards, trading groups and things like that. But, people with boots on the ground that actually are living it and doing it is way better than, an unpaid group, or even some paid groups, in my opinion.
Very much so. So I think we touched on pretty much everything. Was there anything else that you wanted to touch on that you maybe missed?
I would just invite anyone, that wants more information. We do a lot of writing on our website, archertaxgroup.com. We've got a news and notes tax blog that, we've done things like cover, I don't know how many of your listeners are aware of the thought audit from 4chan about reporting, online personalities, and what that actually means for cryptocurrency personalities. We're working on getting a copy of the indictment. We've submitted a Freedom of Information request for John McAfee, because I want to know what the IRS is doing on the back end and how they're going about building a case against him, and if it's actually cryptocurrency related or something else. I would encourage anyone who wants to use those resources, come utilize those resources. We also give free consultations. There's a link on our website if you want to call and ask questions for 15 minutes. We'd be happy to talk about, your listeners' specific questions, or if you want to come on as clients, reach out. We're always happy to, talk and see if it's a good fit. If not, we might be able to refer you out to a couple different people.
There we go. Yes, so that website's going to be in the description for anyone who is, still looking for somebody to do their taxes. Please reach out, get that consultation. It really is extremely beneficial. thank you. I really do appreciate you coming on, giving us, all this crucial information. I know a lot of people they get worried at this time of year from now until about March, end of March, beginning of April. They're running around, they're frantic, they're panicking. So thank you for coming on and kind of clearing the air. I really appreciate that.
Yeah, anytime we can help educate the community and make it a little bit stronger, and honestly keep a little bit more money in the taxpayer's pocket legally, we're all about that.
All right, guys, if you're having trouble navigating tax season like I was, and you're looking for an enrolled agent who really knows his stuff on crypto, Drew's your man. So head over to his website at archertaxgroup.com, and like we talked about in the podcast, you can get that free 15-minute consultation where Drew walks you through what your needs are and what he can do for you. All right, guys, that wraps up another episode, and I just want to take a quick second to ask you a huge favor. If you found anything in the episode helpful, or it's been inspiring to you in any way, I just ask that you share it with your friends, family, anyone you know on social media, and hopefully we can help them out as well. Have a good one.